Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, welcome to today's market update. I've got a few things I want to cover. Firstly, I want to cover a very funny comment that I actually found on my yesterday's YouTube video. Then I'm going to be covering the indices, what happened today, quick indices, silver and gold update as well too. Plus also I'm going to be covering Bitcoin today as well too in today's video. And I'm also going to be covering, I talked about in yesterday's video, a powerful reversal pattern, how the market flows by using the trend analysis and so on and so forth. I shared with you a trade that I did over the last couple of months by utilizing what I taught in yesterday's video. If you missed that, I'll talk about it again. And also I'm gonna explain to you what a breakaway gap is in the market and how it can be very powerful when getting into a very good trade. So that's what I want to talk about here, guys. A few things, guys. Firstly, $7 trading course. If you haven't got that yet, very first link in the description, make sure you grab that. It's a $7 trading course. And also, guys, if you're interested in becoming a 12-month or over 12-month private client of mine, if you understand, if you look at the learn my #1 trading strategy and understand all about my coaching program, I'm running a live web class, and so that the second link in the description, click on that. You can go register for it today, and on that web class, I'll talk to you about all about my coaching program and if whether it's a good fit for you or not, and also that. So I've just opened it up right now for over 12 months worth of coaching. So if you're interested in that, I'm only doing 10 spots only. So click on that second link in the description if you're interested in that, and then go check it out. Now, onto the funny comment. Let me just share this with you here, okay? Let me see here. So the yesterday's video was market update. What's next for silver and gold stocks? Powerful reversal, end of move. All right. So look at this here. The thing was from this guy here. He said, "Man, could you speak more rarely? I'm struggling to keep up with your German machine gun spit 126 words per second." Guys, leave a comment in below. Do I speak really quickly? I don't. It's just me, you know what I mean? I get excited about what I do and I love what I do, and I get very, very passionate about what I do. So I guess I'm just analyzing the way that I'm speaking to you right now, and I guess I am doing 126 words a minute. So, Florian, I guess I don't apologize. This is just me. I get excited, right? We've got to get excited about something. If you're not excited about what you do, not excited about these markets, how can you do well out of them? So anyway, that's the funny comment there. Onto the Dow Jones and the S&P and all that down home country goodness. What's happened just recently? Let me bring up this. So today, pretty much nothing today, guys. Across the market. The market's just recently closed for me. I actually got into a beautiful, beautiful setup today. So beautiful trade today. Really good, clear, beautiful setup. So I'm really, really happy about that. But looking at the Dow Jones, pretty much a nothing day, right? Really, really, really not much going on there. Same for the Dow Jones there. Not much going on there. Now, when it comes to the indices, really not much going on there, and so on and so forth. But one thing I want to share with you is the power of utilizing different types of charts to see things a bit different, right? So if I look at this chart here, say on the Dow Jones, okay, I'm looking at a 3 month, say this is the last, say 3 months worth of data, see that there. But if I just bring up, say, a blank candlestick chart, a blank bar chart, and then I bring up this chart here, notice how it looks a lot different, right? You can see things a bit differently. And if you bring up, say, 6 months worth of data, now all you can see, right? And one thing that I love about using just a chart like this here is it removes the emotion of red bar, red candle, green candle, and all that sort of stuff. It removes the lines and all that sort of stuff. And what I'm doing here is I'm just analyzing the highs, the lows, and the flow of the market. So that's one thing there. And one thing I did notice by utilizing what I'm telling you is by looking at the line chart, but the weekly line chart, let me just delete, let me just make sure I minimize the 50 moving average there. But one thing I noticed by looking at the line chart was this. Look at this here, right? So the line chart can really give you a very, very, very good clear perspective. Now, what I mean by that is that when we're looking at the markets and we're trying to analyze them, look at it back here, right? Double bottom, high, equal high, higher low, higher low, breaking past previous highs, big bull run, right? And so we're getting the same thing here too, right? Low, this is the low, higher low, higher low. This is on the weekly chart here, right? So buyers are raising their prices, buyers are raising their prices. Now, why is this important? Because as you can see, right, we are definitely getting a bit top heavy here, and you know, that means nothing. It can still go for a big run, right? But what we're looking at here, right, you can clearly see if the market does start to turn over here, that's the big if. That's a big if, right? If the market starts to turn over here and roll over, notice how you can clearly see this as a shoulder, head, and a shoulder formation, like a very, very, very clear pattern. And if that happens, we're probably likely to start to roll over there. So when you're looking at the markets, I like to look at different time frames and different types of charts if I'm struggling to see what that market's telling me. Because remember, the chart's the most important thing. You can see here, right? I have nothing on the chart apart from line. And by utilizing just the chart itself, you can get a very, 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 very clear perspective of what's happening on that chart. So if you're looking at a daily chart utilizing this, then it's only probably going to be a short term. Looking at a weekly chart, looking at a bit more longer perspective. Excuse me. So that's basically on that there. Sipping my green tea. And on to silver and gold now. So that's what I wanted to share with you there. Moving on to silver and gold right now. Let's go to, we'll just bring up a candlestick chart for this one here. Let's go to this one here. All right, actually, you know what? Let's bring up the SLV. So what we're seeing here right now, we see SLV and obviously the silver. Actually, you know what? Let's just go back to here, this one here. All right, cool. All right, so silver having a nice pullback through here. We're sort of just stalling out through here right now. Once again, we're still getting, we're very, very, very high where we are right now. And I still see that if we don't at least have a pullback, we're probably likely to go sideways for probably another few weeks to a month at least. Probably even more before we start to decide, before we refuel and go for another run. This is the same for gold as well too. So we've had a nice move up. I wouldn't be too quite surprised to see, that the market have a retracement, just a nice move down to retracement down to these 50 to 60% level. And if you can see here, right, the Fibonacci from the low to the high on gold, we can see that's the 50, that's the 60%, that's the 50%. If you go back in time, notice how that 50 to 60% range, that area, is all these major resistance levels. So if we do get back down to here, this would be a very, very, very sweet spot for me personally to look to add to my long-term investing position in gold. Right, I'm already in gold right now. I've been in gold since the start of the year. And I don't plan on selling it for another 3, 4, 5 years. I think over the next 5, 10 years, it's going to be very, very, very beneficial over that time. Short term, I'm just saying what I'm seeing right now. And so as you can see, that's these lines through here, that 1400 level is, if it gets down there, it's likely to be very, very powerful support level there. So keep an eye out for that, guys. We've got the Dow Jones there. We talked about that, the potential by looking at the head and shoulder. We talked about the silver and gold there. Let me bring up Bitcoin right now. One thing I want to do is I want to bring up Bitcoin. So let me bring this up here. I'm going to bring up my other software that I use for Bitcoin. This is what you're looking at right now, guys. I know it looks like a bit of a gibberish here, but this here is my software that I use for my futures and also Forex trading. And also I use it for crypto trading as well too. I've only ever, by the way, guys, people have asked me, John, do you trade crypto? Do you look at crypto, stuff like that? And I actually just shared this with my private client group. I've only ever traded crypto once, and it was based on my trading system, and it was back here. My system said to get into here, right? So I had this breakout bar. I got into there. The market ran down. This is back here with Bitcoin was at 6,500. When it broke out, my system said to go short. So I shorted Bitcoin. It ran down, and then I got, I had a moving average there. So I entered here, and on this bar here, I exited there. So I didn't get the very low point, but I got pretty much, I'd have to say about probably maybe 65, 70% of this entire move down. I grabbed that nice move down. That's the only time I've ever traded Bitcoin, by the way. So when looking at that, I'm a trader there for Bitcoin. But a reason why I wanted to share with you what's happening with Bitcoin, because let's go to this weekly chart here, because it's very, very, very evident to what's happening with silver and gold, right? Look what happened here with Bitcoin. What did we do? We got a very nice big run up, didn't we? For quite some time. Look at this here, right? See that very big, nice big vertical move up. And look what's happening. Remember, this is a weekly chart, guys, right? This is a weekly chart. And this is what I've been saying about the markets and silver and gold right now. We've had a very big run in silver and gold. So what are we expecting here? This is 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. So pretty much 3 months now of just a pullback. Now, why has it been pulling back and just not doing nothing for the last 2, 3 months? Right? Because look at all this big vertical move. It's had a lot of price in a short period of time. Now time must catch up. It must go through a resting phase, a refueling phase, before it starts to go for another run. Makes sense? But if we're looking at that daily chart, as you can see, right, the weekly chart, definitely got that long-term buyers in control. Definitely long-term buyers in control there. But that short-term chart through here, if we have a look through here, so that pretty much that short-term chart, we've got this sort of trend line coming down through to here, so to speak. And then we have definitely a long-term support level coming down through here. So it's definitely compressing through here in a triangle pattern. Now, the interesting thing about this is that this could be very, very bullish for Bitcoin. Okay, this could be very, very bullish for Bitcoin because it's squeezing up through here. And as you can see, right, it's a descending triangle pattern because it's lower highs, it's lower highs as it's finding support. But because that long-term weekly chart is bullish, this is a resting phase, and this could be just resting to go for another big run. And so just like we see here, right, depending on what happens with the breakout. So if I squeeze this up here for a minute more and I bring this over here, let me see if I can move that for a minute. Actually, you know what, let me just delete that and I'll draw it again. All right, and then we got to go through there to there, right? So I'm just going to draw it through there, and I'm just going to draw up actually the closes. And as you can see, right, what I did just there, I drew the high, but as you can see, right, it's had a problem closing above this level through here. So what are we getting right now in the space of Bitcoin? Okay, and this doesn't matter what market you're looking at. This could be crypto, this could be Bitcoin, this could be anything. But what do we have here, right? We have a low, pretty much nothing going on through here, right? Bit of a double bottom, a higher high. This is a high. A higher high, came down, bit of a nothing pattern through here. It's run up through here, and now it's having a bit of a pullback through here, right? So just a very small pullback. Now notice once again, guys, remember once again, that weekly chart is very on the bullish upside. So trying to short Bitcoin right now would be very, very dangerous. Why? Because that long-term trend is still up. And so trying to fight that would be very, 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 very risky. As you can see, right, it was back here. It was back when Bitcoin was in a downward trend that I was happy to short it. That's where my short was right there. So I was happy to short it because I was going with that trend, and that gave me a really, really, really nice successful trade. So going back to that daily chart, and again, guys, this analysis works on any market at any time frame. It's not just I'm not just analyzing Bitcoin here, right? Use this analysis in any market you're looking at. So what we're looking at through here. So let's just say, for example, we get this nice descending triangle pattern. What is this here? This is refueling, right? Ready to go for another run. What happens if we get a bar that looks like this? Big breakout bar. What would that mean then? Firstly, it would mean what? It would mean a low. It would mean a higher low, breaking past previous highs. Then now that's the if scenario, right? We don't know, but we're always looking to see if this happens, then we know how to respond to the situation. So if that happens, what do we have then? Firstly, we have a break out of the triangle pattern, which is bullish because it's breaking out of the triangle pattern now. Then we have some sort of shoulder, head, shoulder, very, 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 very small shoulder, head, shoulder breaking out. And if that happens, if we start to get that breakout, if that happens, the minimum target for me would be up here at 13,000 if we do start to get that bar break. Remember, guys, but it needs to break above. It needs to be a strong bar breaking above pretty much this 10,500 level, or actually that pretty much that 11,000 level. It needs to be breaking above and very solid bar breaking above that. If that happens, then on the short term, we're probably looking to do that. And then probably from that as well too, it's probably likely to continue up and moving even forward from there. And again, this is the triangle pattern here. So if I bring up, this actually happened with gold. Was it gold or was it? Yes, this would happen with gold and even the GLD prices, right? So if I go back and look at gold here right now, and I'm going to share with you exactly how this worked in the past as well too, right? So we go back and look at gold. Let's go back to here. What was this is exactly what gold did right before it broke out. This is what was getting me excited about a bullish move. We have a very long-term move up, but what do we have on the short term? Right? We have what? We have market moving down and then the market compressing. See how that's actually a descending triangle pattern, but because that weekly chart was we come from a very long-term move up, resting phase, resting, and as soon as it breaks out, guess what? Now, if actually let me do this here. Let's take that off this. Actually, let's do that. Right. So as soon as we started breaking out of this triangle pattern here that we had here, right? Look at that there. Right. So it was right. Let me delete that off the screen. Right. So it was right there. Right. Look what we have here. Right. Market move up, a little higher low. This bar here, definitely not confirmation. But notice how when we definitely got the breakout, that was the start of what? The move up, right? So see how that's almost identical to what Bitcoin is doing right now. Now, it's definitely not bullish, right? So what I'm saying here right now is if we go back to that Bitcoin chart, I'm not saying this is definitely bullish, but the market repeats itself. And when you start to identify these types of patterns in the markets, you can see where it's likely to run to. So if I go back to that other chart, or if I go back to Bitcoin for a minute, where did I say this is likely to run to? To the previous highs, so which is up here, right? This is the minimum target of 13,000. If you go back to, I actually made a trading decision based on this. I've invested in gold for quite some time, but I traded not only gold, but the exact same thing happened with was it the GDX or the GDXJ? One of those. I think it was the GDX. Actually, I'll just go back to gold just to keep it simple for you guys because I'm using that analogy there, right? So, but what I'm talking about here is that if it breaks that level, as soon as I see this breaking of this level through here, where do I think it's likely to run to? It's likely to run back up towards its highs up here, right? So, not only was I in an investing position, meaning long term, but when I started to see this, I started jumping on some shorter term trading positions, and look at this here. Notice how it ran right to where? To the high point, and then it paused, and then we continued up, right? So it's the same thing again and again, right? It's the exact same thing. So when I identified this pattern, I knew that all this here, this little triangle pattern here, was just a time of refueling, resting, and then when we did start to break out, and it was in line of this big underlying trend, and the overall trend was going up, I knew the daily chart was starting to break out, which is now just a continuation of that long-term trend. So if we go back to Bitcoin here for a minute, as you can see, right, this is the exact same thing we're talking about here. Compressing up. We've been very, very, very bullish for quite some time. Now we've been resting for almost 2.5 months now. We've been resting, going sideways, compressing up. If we get a little breakout, depending on the bar, if we get a nice little breakout bar, that I may even get into this for a very short-term trade myself, and then with that there, depending on the trade, it might be a short-term trade for starters, but it may turn into a big move where we're likely to run basically back up to those highs here of 18,000. That's what it may be doing right now, because on the weekly chart, what are we getting? A nice move up, and we're just building up a nice flag formation, aren't we? Look at this here, right? So nice move up, and then we're building this nice flag formation. So it may be getting ready to go for a run. So my short-term target, if that happens, if I do get that good breakout bar, would be that 13,000 level. But if we do continue up, just like gold did, right? If you go back to gold, I know I'm switching between gold and Bitcoin here, but I'm trying to use the analogy of the pattern itself. Okay, so if you look at the pattern itself, what happened here, right? The pattern itself says, okay, very high probability I could run to the next major resistance, which is up here. But did it run to the major resistance? Yeah. Did it stop there? A little bit, right? For about a week or so, and then it continued up, right? And then it continued up and continued up. And then, so from there, if Bitcoin does the same thing, which is no guarantees that Bitcoin is going to do the exact same thing, right? Then this could be a springboard. This could be a springboard, or the refueling, the resting phase to get people long, or for the big boys to get long again. And if that's the case, short term would be 13,000. And then that long term, actually, let me squeeze this right up a bit more. And then you can see here, right, that long term would be up there around about that 18,000. Around that 18,000 level would be there. So there we go, guys. So I hope you can see, but as you can see, traders, right, like this has nothing to do with Bitcoin or silver and gold. I hope you can realize this. I'm telling you about Bitcoin, and I'm bringing up silver and gold. One, I'm trying to show you what happened with silver and gold and how these patterns repeat. Secondly, there's no guarantees that it's going to be a profit trade, right? So be smart with your risk management there. Really, really, really important. Don't go loading up saying this is definitely going to happen. No, there's no guarantees. But I'm trying to show you what happened with silver and gold. What happened? Where did it initially run to? And then what actually happened after is because the exact same pattern has happened with Bitcoin. But I'm not just teaching you about, I'm trying to share with you that these patterns that form in the market, it doesn't matter whether it's a silver and gold chart or it's a crypto chart or it's a stock chart, these patterns form when you start to recognize these patterns in the markets and you start to recognize these things. That's, they can really, really, really help you out there, and that's what in my $7 trading course, that flash sale, the very first thing in the description, I talk to you a lot about different chart reading techniques to really, really, really help you out. And if you really want to take it a step further and you want to become a coaching client, as I said at the start of the year that I started this video, I've just opened up 10 spots. If you're interested in that, I'm running a web class, second link in the description, go register for that. And I've got 10 spots open for over 12 months worth of coaching. So go check that out and see if it's right for you. But as you can see, right, we can see what's happening through here with Bitcoin. So there we go, guys. There's a bit of a Bitcoin update. And now I want to talk to you about something that something that I talked about yesterday, right? Which was the powerful reversal pattern that forms in the markets and how the market starts to give you some warning signs about the short-term changing. And if you remember yesterday's video, I talked to you about how we talked about the highs and the lows. If you haven't seen that video, you probably want to go see that video because I'll give you a quick little demonstration here, right? But one thing I want to share with you was a trade that I did a while ago based on this, right? So it's called a change in trend or a short-term change in trend. Okay, so what I'm going to cover right now is that the powerful reversal pattern that I talked about yesterday, and actually utilizing the trade. And then I'm going to be covering, the last thing I'll be covering is understanding breakaway gaps and how that can be very powerful for your trading. So the thing that I'm looking at here right now, guys, is this. Okay, just waiting for my software to load up. All right, as we can see here, right, in a downward trend, what do we have? Just like we had with Win here. Okay, we had high, lower high, lower high, lower high. Let's say that was the major lower high there, right? So sellers are lowering their prices, lower high, lower high, lower high, clear downward trend, right? What is this here? Double bottom, isn't it? Now, what is a double bottom? A double bottom is it breaking past previous lows? Like here, break past previous lows, yes. Break past previous lows, yes. Break past previous lows, yes. Break past previous lows, no. The buy is what? The buy started supporting here, right? So double bottom is generally a bit of is what it says, right? A bottoming pattern. Now, what are we looking for? In a downward trend, we have lower highs, lower lows. In an upward trend, what do we have? We have higher highs and higher lows. So if we go from a lower high, lower low to what? To a higher high, higher low. Who's in control here? Who's in control? We went from what? Sellers to now what? Buyers, right? So this is and this point through here is called the change in trend, at least for the short term. If we're looking at the daily chart, remember it's only for a short term because that weekly chart can come in really, really, if the weekly chart has been down and you're looking at the daily chart, that weekly chart can kick in really, really quickly. So it's only a short term. So utilizing what I just said there, I saw this with Win. Just actually, this was back in April this year, but I'm just sharing with you how that works, right? So what do we have here? We had that double bottom that I saw. We had this high. Then what do we have up here, right? A higher high. Or that's actually the higher high had a pullback. What's this here? A higher low. And then the market started to break up through here. Who was coming into here? The buyers, right? Remember, it was lower high. So this is what we got, lower high, and then we got a double bottom. Then we got a higher high, and now we're getting a higher low. See how this is a bit of a changing trend. It's changing from the buyers are lowering their prices to now the sellers are lowering their prices to the buyers raising their prices. Make sense? So as you can see, that's what's going on there right now. It's the buy, and so this little bar up, and then including with that, we started to get some really good increase in volume. That was saying to me higher high, higher low, then a little move up, or we started to break up. Was also saying, and the volume behind this was saying the big boys are coming in. Makes sense? So we had that higher high, higher low. The market's telling us now this is changing trend, at least for the short term, okay? Short term only. And we're now likely to see a 2 to 5 day or 1 to 2 week rally. I would say on average 2 to 5 days if you're just trading these short term movements. And then when doing that, right, when we've got the volume coming in, that's saying that the big boys are coming in at least for that short term. And as you can see, right, this thing ran up quite nicely for a very short term trade. Now that doesn't look like much, but that's between 100 and 100. I forget exactly what it was, right? Between 80 and 150% return on options in basically a week. So I hope you can see what I mean by there. So that's very, very, very powerful analysis we can start to apply to any market in any time frame. Okay. Now, one thing I want to talk to you about is gaps. And when you start to see big gaps in the markets, what do they mean and how to utilize them in your trading, right? So a breakaway gap, there's three different types of gaps you're going to see in the markets, okay? You have the first one, the first gap is called a breakaway gap. And now the breakaway gap is exactly what it says, right? It's breaking away. It's generally the start of a move, okay? Very, very powerful. I talked about how to identify that and how to have a probability of that happening. The second one is more of a continuation gap. The continuation generally happens in the middle of an overall move. So one move could be, say, the market generally goes in three stair steps, right? So we have a stair step down one, stair step down two, stair step down three. You generally get a breakaway gap here, continuation gap here, and then the third gap is an exhaustion gap. So the third gap is actually an exhaustion gap down here, generally speaking, okay? Now, there's not always gaps in the markets and they're not always the same, but you can start to identify it. So how do we have a high probability of understanding that getting in when there's a breakaway gap? Because the breakaway gap can be very powerful when getting into a trade because it's breaking away, right? It's showing a lot of buyers there. Well, when you're seeing the market, as you can see here with WIN, this is exactly what happened with WIN. Notice how we had the market moving up through here. And then we had this pullback here, right? See how all these small bars, it was actually pulling back, right? We weren't getting strong sellers, right? We didn't get a strong move up and then a strong selling period, did we? No. We got a small pullback here, right? So we weren't getting a lot of strong sellers through here. And then notice from here, right? We had this pullback and then we had this little gap here. Notice that little gap and then a nice, good, solid up green candle with what? With an increase in volume. That there, after a pullback with small bars, and then you get a little gap up, not a big gap, just a little gap up in a bar with volume, that's now saying this is now a high probability that this is a breakaway gap. And this candle here is the start of the next, what I call price move or the next move in that direction. And again, I call it a 2 to 5 day move because it's on a daily chart. Now I do have other setups that tell me that this is now likely to go for, for a few weeks. But that's definitely going with the weekly chart. This win trade here, I got in here and then I got out here. Okay, basically that there. I think that was that there, or maybe I got out a couple of days later, right? I knew this was going to be a short-term trade, which means I'm only in for a couple of days. I do have short-term trades 2 to 5 days, and then I have my longer-term plays where I'm probably in maybe 2 to 5 weeks. And so that's the type of trading there. So I hope that helps you out there, guys. They're the different gaps in the markets, but the whole purpose of the gap is okay, if we get a nice small pullback with small bars, and then suddenly we get a little gap up, and then the bar, and there's volume, that's the sign that the big boys are starting to come in. And all you're doing is trying to jump on their coattails for a while, for just a short term. Don't get too greedy, just for a short term. Say thank you very much for the profit, and then take it off, and then you can go do it again and again and again. So I hope this helped you out there, guys. If you enjoyed this, make sure you jump on that $7 trading course. Or once again, guys, if you enjoy this type of training and you like my style of training, you like to learn my #1 trading system, and also get all the details about my coaching program for over 12 months worth of coaching, I've just opened it up just recently, and so I'm running a web class today. Second link in the description, click on that. You can go register for that web class, and you can get all the details about my coaching program, whether it's right for you. And again, I've only opened up 10 spots, so go check it out right now.